I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending July the 3rd. With this market come in this week, a lot like a pre-holiday week would normally be on Monday. But then we started to see a lot of upheaval there and coming in on Tuesday, and it brought about three R's that we would think of to compare this market. It's remarkably strong and holding up on tight supplies. It's resilient in that it keeps coming back time after time, and resistant to pressure that keeps coming from all areas that we really didn't expect. On Tuesday, it was USDA row crop reports that come in that put a lot of pressure on the cattle markets. Your crop report came in, showed that corn stalks, and I'm not talking about corn stalks, but corn stalk piles were 15% larger than what they were the same time a year ago. Soybeans were 54% larger than what they were the same time a year ago. Both of those seemed pretty impressive, but they were not nearly as big as what analysts had predicted they would be. So that was real bullish for corn prices, which is going to be bearish for feeder cattle, of course. Also, your USDA prospective plantings report come in on Tuesday and showed that corn acres are going to be down 2%. When going to be the lowest corn planted acres since 2010. Well, that's going to be kind of hard on your cattle markets, thinking there's going to be less corn around. Soybeans going to have 2% more planted acres and an all-time record high. But that came in on Tuesday. It put your feeder cattle board down the limit. It took big hunks out of your live cattle futures, but then they turned right around the next day and came right back. So a lot of resiliency there. Came right back. Your cash feeders this week started out before those reports come out steady to $3 lower. That's about what we'd figure it to be on a holiday week and getting into the hot time of the year. But then very volatile at the middle of the week. Down hard in some middle-sized auctions throughout the country. There on Tuesday, kind of following the board, and then come back real sharply higher on Wednesday, kind of like the board did, and just up and down, up and down. But for the most part, I think we probably lost $2 to $3 on our cash feeder prices for big yearlings. Calves were steady to $2 lower where they were tested. And this week, your Southeast was closed pretty much everywhere. And so that's your calf market this time of year, so really didn't have a good test. They should mostly be back next week after the 4th of July. They're always going to take 1 week off for your 4th of July, and there may be some places that are closed for 2 full weeks. But in the Northern Plains had some yearling specials this week. Places like Kearney, Nebraska at the Platte Valley auction there. Green City, Missouri had a big special. And those planned scheduled specials, guys put their yearlings together for those. The buyers know they're coming. Got a lot of farmer feeder interest. And just some really impressive prices through there. And pushing those yearlings there. Of course, they're top quality. They're all backgrounded. A lot of times, like in Green City, the conditions just out of this world. Those cattle come in there empty and fairly thin flesh, just on green grass. But so you have those prices coming in that are a world higher than what the board is quoting for August yearlings. But we're going to have an established market on grass green yearlings coming out by the time we get to the end of next week, because we're going to have big videos. Joplin's going to have their video here on Friday. Superior's week in the Rockies starts next week and almost all week long. Be a lot of out front cattle, a lot of late July, early August type delivery cattle, and a lot of fall delivery cattle in other areas. But we saw an end of an era this week as your pits in the Chicago Mercantile Exchange live cattle futures and feeder cattle have closed now completely. No pit trading of any agriculture commodities either on the Mercantile Exchange or the Board of Trade. Kind of an end of an era. Live cattle futures were traded in the pits for 51 years. It's hard to believe it's been that long, but you won't see that particular thing of trade in there anymore. It's all going to be electronic, which is a lot faster, but you're not going to have those guys in Chicago giving us the bits and pieces and the stories of what's going on that sometimes sways the market. But 2015's half over now. Cattle slaughter's down 7.5% year to date. Beef production is down 5.3% year to date. At the same time all this is going on, pork production's up 6.4%. Uncharacteristically, fat cattle direct trade had a lot of demand middle of the week. Of course, we knew a holiday was coming, but the packers come out on Wednesday, very active and good demand. Like I say, pretty uncharacteristic. But fat cattle $2 to $4 higher on a live basis. In the Southern Plains, $1.50 live, and the Northern Plains, which is back up to a premium now, $1.51 to $1.53. Dress trade not quite as active and didn't quite catch up with the gains seen in the live trade, $2.40 dressed. That pretty much wraps up your cattle market summary for this week. Check out DV Auction. On Monday, Virginia Cattlemen's Association is going to have a tele-auction there broadcasted on DV Auction. You can get on there and bid. They've got 1,100 head of mostly well-backgrounded yearlings coming out of that Virginia area, and extremely top-quality cattle. If you haven't fed any of those, you really need to, especially for you guys in the eastern end of the Corn Belt that want to feed some cattle. Those Virginia cattle will really treat you right. But that wraps it up for this week. We'll talk to you next week.